G'day folks, it's Jim here from Orchard Forex. It is Saturday the 4th of September. Well, the non-farm payrolls of the US jobs data have now come and gone. It's a pretty mixed affair all round. The non-farmers were distinctly underwhelming, delivering only 235,000 jobs as opposed to the 750,000 that were expected. So that wasn't a very good outcome, but the overall, the headline unemployment rate, that fell from 5.4 to 5.2%. And the big surprise really, I think, was the average hourly earnings, which rose, were expected to come in at 0.3%, but actually came in at 0.6%. And that has led bond yields to head higher on the spectre of possible inflationary conditions, despite what the Fed are telling us. But overall, the markets were unsure what to make of things, really. The stock markets, they were choppy, but ended flat on the day. The US dollar was a little bit softer for the fourth or fifth day in a row, actually, but it was only down about 0.7% on the week, the US dollar index, that is. And so conditions remain really a little bit uncertain. I think traders not really quite sure what to do, given the Delta variant and the possibility that COVID could yet hamper economic growth going into the final quarter of the year. So we have to wait and see on that one. As far as the markets are concerned elsewhere, the commodities had a good day. Silver in particular, that was up about 3%. Not really quite sure why that decided it needed to head so sharply higher. Gold followed in part. That was up about 1%. Oil went in the other direction and lost about 0.75% on the day, but still had a pretty good week, really, given where it was this time last week. Looking ahead, we've got central bank meetings to come from the RBA, the ECB, and also the Bank of Canada, and there'll be a fair bit else as well to come this week. So we'll have a look at the calendar at the end of the video. But in the meantime, let's go and have a look at the charts and just see what they've got to say, starting with the dollar index as per normal. Okay, folks, so here we have a weekly chart of the dollar index, and it's fairly uninspiring, really, given that we continue to gravitate in this range either side of the neckline of what I thought was a head and shoulders, but it's kind of running out of steam, so probably becomes invalid. But even so, we're not really doing a great deal. The indicators had been pointing higher, but they seem to be rolling over, becoming more neutral. So I suspect as far as the FX markets are concerned, we're probably likely to see more consolidation, at least for the US dollar pairs. And it seems to me, if anything, we could actually drift a little bit lower for the dollar this week. The index closed near its lows, and further tests of this kind of support down around here would not really surprise. Go back and have a look at the daily charts, and here we can see that the daily momentum indicators are pushing a little bit lower, so it wouldn't really surprise me at some stage this week to come and have a test of the 100-day moving average, which lies at 91.65, and the 200-day moving average at 91.36, something like that. Note that the 100-day though has crossed above the 200-day recently, suggesting that maybe we could head hard, but it's a fairly flat cross, not really showing us any hint of direction either way. So I suspect we're probably in for further consolidation. These lows down around here, 91.80, they'll provide some support early in the week. And I guess on the top side, you know, if we were to head back above sort of 92.80, we'd probably see resistance if we headed towards 93. So that probably puts the range in the euro at something like 118 to 119.5 early in the week. I don't even think we're going to see those kind of parameters, but that's probably about it as far as the euro is concerned. And with that, we'll go and have a look at the euro chart. Okay, so here we have a 4-hour chart of the euro, and we've had a fairly steady but uninterrupted trend to the top side. We ran out of steam on Friday at this particular high back here, just above 119. And that at the moment is the initial resistance, or 119.10 or so. As far as the indicators are going, the 4 hourlies look fairly positive. The hourlies are showing some bearish divergence. So while I kind of like the euro to continue to head higher, I think we might see slightly better levels to buy it, and I'd probably look somewhere down around the 100-hour moving average, so 119.40.50, maybe down around this level here, 55.60. But I'd be looking to buy it. I think if we go out to the daily charts, they're tending to show some positive momentum. They seem to be heading higher. We've got this bullish divergence as well that's working in our favour. So overall, I prefer to be long the euro than short at the moment. The weekly charts, as far as the bigger picture is concerned, we're not really doing anything at all. It's pretty flat. But I kind of like the idea that eventually we're going to take out this 119.0510 level. And if we do, there doesn't seem to be an awful lot to stop it going on to 119, where's this level, 60.70, this high, sort of 60.75, something like that. And then if we can do that and get above there, the 120.30 is the next FIBO resistance. So 120 figure 30. Not sure we've got the legs for that early in the week. Wait and see what the ECB say. The European data is slightly more upbeat than the US data has been recently. So further support for the euro wouldn't really surprise me. And as I say, right now I prefer to buy dips, looking for some. We close at 118.75, so maybe 118.50, 60, something like that. Looking for a test of 119.10 and beyond there to 119.70. That's the way I'm going to be playing it early in the week anyway. As far as dollar yen goes, I would be staying away from dollar yen. It is exceedingly choppy, so I don't think it's really worth getting involved. The 4-hour charts do point a little bit lower perhaps. The dailies are doing nothing at all. One thing of note as far as the yen goes, we'll have a look at this chart. And this is a daily chart of the Nikkei, which appears to have broken higher. This comes following the announcement that the Japanese Prime Minister is going to stand down. We saw a swift move higher there. We've broken above the 100 and the 200-day moving averages. The momentum indicators are pointing higher, so I think the Nikkei might go higher, which might see international investors plough into the Japanese stock market. So their need to buy yen might lend support to the yen and push the dollar down. But I'm not really all that interested in dollar yen at the moment. But that's something worth watching. If the Nikkei continues to head higher, we might see dollar yen come under a bit of downside pressure. Moving along to sterling though, and here we are with a 4-hour chart of sterling. Cable had a crack at 139 on Friday, didn't quite make it there, retreated a little bit to 138.5 into the weekend. But as with the euro, we've seen this nice little uptrend here. It looks as though it can continue to keep going. The hourly charts possibly heading a little bit lower. The indicators they're looking a little bit soft as far as the start for Monday is concerned. But I still prefer to buy the dips, as with the euro really. This 137.90 is where the 100-hour moving average is. So if we saw it down around sort of 138 figure 20 or so, I'd probably be looking to buy dips there. As far as the daily charts are concerned, we've got some mild positive momentum, and we've actually cracked back above the pink line here, the 200-hour moving average. Let me blow that up a bit. Sorry, the 200-day moving average, I should say. And we're really approaching the 100-day moving average. That comes in at 139.20, and that's going to be resistance if and when we see it. But if we do manage to break above there, then I guess it's opens the way to 140 and above. But the momentum doesn't really seem to be there at the moment for a big move, but I do prefer to be long cable rather than short, generally with a mild negative US dollar view. The Aussie and the Kiwi are a little bit more interesting. And here we have a 4-hour chart of the Aussie. And despite the pandemic conditions, with lockdown in New South Wales and Victoria in particular, the Aussie is benefiting from the general risk on sentiment at the moment, and it looks as though it could see a test of 75 cents, as I think I said last week. The 4-hour charts are becoming a little bit overbought, so I wouldn't necessarily be buying it here. But certainly if we saw a pullback towards 74 or even below there, as long as we stay above this rising trend support down around at the moment about 73.75, don't think we're going to see it down there early in the week, but and that's rising all the time towards 74. But I'd look to be buying dips. The dailies, they do seem to have a positive bias, and an eventual test of the 100-day here. 75.40. The 200-day, well, that's 76. Maybe that's too far off at this point in time. But I kind of like that to be the direction of it. So once again, as with everything else, really buy dips against the US dollar. The Kiwis, much the same. And the Kiwis, once again, the momentum indicators are slightly overbought in the short term, but I think we're going to power ahead. If you look at the daily charts, we've broken various points of resistance, the 100-day, the 200-day, and this descending trend resistance. The daily indicators look quite positive. The weeklies, not really telling us an awful lot at this stage, but I just think that with the dailies looking as they are, buying dips, probably well, 71.25 if we saw it, I suppose. Probably leave a stop loss below 71 cents, but I like it higher, and I think we're probably going to see a test of 72 at some stage. And beyond there, if we go back to the dailies, we might see minor resistance at 72.5, but the major top doesn't look to be in place until about just above 73. So I like to kind of go with that for the time being. As with everything else, be long of the currency against the US dollar. So with that in mind, moving along to the stock market, and here we start with a daily chart of the S&P, and it continues its ever slow grind to the top side, and it appears nothing's going to change really in that effect. After the non-farm payrolls, it would appear that tapering is not on the cards following those non-farm numbers. So I think a slow grind to 45.5 and then 46 could well be the outcome. At some stage, we're going to get a nasty pullback. We haven't really had any kind of pullback at all, well, since when was this, last September? So that's 12 months ago now. Every small pullback has been bought into quite aggressively. The rising trend support now comes in at around 44.25, so we could easily see that kind of pullback. That wouldn't surprise at all. If we were to break this rising trend line, though, then I think we could probably quickly head back to 4,300 and possibly even back down to this 200-day moving average. That's around 4,000. That's a long way off at the moment, but we are due some kind of correction, I think, and it's only a matter of time. But for the time being, you can't argue with the trend, so just continue to go with it. The other major indices look pretty much the same. We'll have a quick look at the Dow and the Nasdaq. And here we have the Dow. That's flattened out here at sort of this 350 level. And the dailies are not really showing us an awful lot, but I suspect we might eventually see a break and head on towards 36,000. But once again, we've got rising trend support, and at some stage a correction wouldn't really surprise. So pretty much the same deal with the S&P at the moment. Go with it. Keep its stop losses fairly tight though, and because we need to be waiting for the accident that will inevitably happen. The Nasdaq, once again, the Nasdaq sitting just below all-time highs here at 15,650. The daily indicators, though, they point higher again. The weeklies remain overbought and do show signs of bearish divergence, so we do need to be careful. The RSIs may be running out of a bit of steam. The MACDs certainly are, so just keep an eye on that. But at the moment, stay with the trade. And the ASX, here we have a 4-hour chart of the ASX. I'm not really quite sure what to think of that, given the complete lockdown of the Australian economy and the COVID conditions. It does seem that the vaccination rate is really beginning to pick up, and we may possibly head higher as we look to come out of lockdown. But at the moment, we've been chopping around either side of 7,500, which I think is a pretty impressive result in itself. The 4-hour charts are not showing us anything as far as early trade next week goes. The dailies, as with everything else, we remain above this rising trend support. If we were to see a break, we did test it on Thursday. We tested the downside here, but held and came back. I'll just go and have a look at the 4-hour chart. And here you can see on the 4-hour chart, we tested the downside of this trend support, and it held and bounced back really quite nicely. I was a bit surprised about that, but overall, I remain fairly neutral. But if the US indices do continue to head higher, that will drag the Aussie along with it. And if conditions start to improve, I guess that might give an upward bias to the index. but with daily new cases up near 1,500 per day in New South Wales at the moment, it's hard to see the ASX really wanting to take off. So probably more of a range trade with a stop loss. I'm staying long, but I'll probably leave a stop loss down below this 50% there, but down below 7,400 now. Get out of it there, because if we do go below there, then we might see a bit of a deeper correction. Okay, so moving along to the commodities, and here we have a daily gold chart, and gold had a good end to the week. It's broken above the 200 and the 100 day moving average, and the 100 has actually crossed above the 200 now, so maybe we are picking up momentum. The daily indicators are very mildly positive, and as I said before, I suspect we can go up and have a look at sort of 1860 maybe this week. If we were able to break that, then I guess this level comes into play here up sort of above 1900, but I'm not really expecting that for the time being. Right now, I think, as I think I said last week, look to buy it down around 1800 if you're not already long, and keep a stop loss, I would say, below sort of 1775. But I really think we're going high. I don't think we're going to see 1800 this week. I think the bias is to the top side, and we can eventually, in my opinion, I think we're going a lot higher, but that remains to be seen. Silver really had a good day. Let's have a quick look at that. Now, I was quite bullish silver last week, but it really did nothing at all, and I got bored with it. And of course, was square by the time it actually did move higher on Friday, and it closed right on FIBO resistance, but the indicators point higher. So I think once again, you probably buy dips if we see one. This would now become support down around 24.25. Probably not going to see it down there. If you saw it sort of 24.5-ish, probably buy it there. I think we're probably heading towards 25 and eventually back up to here, 25.50. This is the 4-hour chart. The dailies seem to have mild positive momentum. I wouldn't go overboard about it, but the 100 and 200 day moving average, they're not really coming to play until the high 25s, so I don't get too excited about them. But yes, I think being long the metals is possibly the way to go. Just quickly, this is a weekly chart, and the brown line here, that's the 55-week moving average. So we closed right on that. So that's going to offer some resistance early in the week. The weekly momentum indicators have been pointing lower, but they seem to have bounced. So it all adds to my theory that the metals will head higher. Maybe you need to be patient, but I'd rather be long than short. Finally, let's have a look at oil. Okay, here we have a 4-hour chart of oil. Now, as I said in the introduction earlier, we bounced quite nicely off this sort of 62 low. We did get back down briefly to sort of just under 67.5 last week, but we came back from that, and we're now sitting against resistance here, and that comes in at sort of just above $70 a barrel. Eventually, I think we're probably going to take that out, but in the meantime, the 4-hour charts do have some bearish divergence, so I wouldn't be in too much of a hurry to buy it here. The dailies do have some positive momentum though. If we blow this chart up a bit, the 100-day moving average comes in at 68.75. So I'd probably look to be buying it down around that kind of level, hoping for a break of the resistance and the 55-day moving average, and eventually I think we can head back above this, or 70.5. This high here, 71.85 and 74.20, they're going to be important if and when we see them. So yes, buying dips is the name of the game, I think. And if you do get long down here, I guess the place to leave a stop loss is probably below last week's low, which I think actually was, if we look at the 4-hour charts, that was at 67 and change. So stop loss left below there would be pertinent, in my opinion. Okay, we'll just have a quick look at the calendar. Okay, so here we go, and it's a US and Canada holiday on Monday, so we can expect a fairly quiet start to the week. Not that there's an awful lot going on anyway. And if we move forward, the main event of Tuesday, we do get the Chinese trade balance, that'll be important, but the RBA interest rate decision, at which I suspect they'll delay any thoughts of tapering given what's going on in Australia at the moment. Can't really see them doing much there. The EU Q2 GDP figures will be announced. They'll be important. We've also got the ZEW. Wednesday, start off with Japanese GDP, but there's not much else about. And then Thursday, late Wednesday, we've got the Bank of Canada interest rate decision. Thursday, Chinese inflation numbers. They'll be closely watched. And then we've got the ECB interest rate decision. They might be a little bit more hawkish. The ECB are probably reasonably upbeat with some of the data coming out of Europe at the moment. I don't think it's going to be anything too dramatic coming from the ECB announcement. But Christine Lagarde will probably paint a slightly more rosy picture, and that could give the euro support later in the week. Then Friday, we don't really have an awful lot to go on, I don't think. German inflation data and the US PPI and wholesale inventories, but that's about it. So it looks like it's going to be geopolitics more than the calendar that really decides the outcome for markets this week. But the central bank meetings will be of importance. So have a good week's trading, and we'll catch up with you again next week. Cheers.